Good morning, everyone, and welcome to our COVID-19 weekly webinar updates for not-for-profits. Hi, I hope everyone is well and safe, and I hope everyone is warm. Here at my home here this morning, when I woke, is 8 degrees. So obviously things are starting to cool down quite considerably. So today, our panel of experts, we have Aidan Smith, our Head of Not-for-Profits, and Mariana von Lucken, our Partner in Tax Consulting. My name is Kim Kellaway. I'm Head of Clients and Markets, and I will be your moderator for today. The format for today will be very similar to what our weekly webinars have run. So Aidan will provide an overview. Mariana will then provide an update on JobKeeper, and then we'll have a number of polling questions. At the end of the presentations, we will then have our Q&A session. So I ask that during and throughout the presentation, please go into your Zoom control panel and start entering your questions into the Q&A section, and then we will start to answer those at the end. So I'll now hand it over to Aidan to provide an overview. Thank you, Aidan.
Thank you, Kim. 8 degrees where I'm from. That's the height of summer, so I think this is fantastic weather just now. Good morning all, and welcome to this week's seminar. I think it's continued to change and develop. There's continued changes in legislation, and the point I made a couple of weeks ago is that it's critical you're not relying on information you understand to be correct from a few weeks ago, or even a few days ago. There's so much change that's happening every day. It's really important that you look at the up-to-date information. So if you're not sure about that, you reach out to us. There's also opportunity during the seminar to ask some general questions. And if you have any specific questions about your organisation, you can also reach out to us again. And we encourage you to do that. They'll say you can't win the raffle if you don't buy a ticket. You won't get this unless you try. Okay. As far as other updates, of course, we've received the correspondence from us. We have these weekly seminars we're doing. We're looking at all the publications and releases that are published by various bodies, including those by the regulators. You might know the ATO released some information last week in relation to key dates regarding the first two JobKeeper fortnights, and that includes clarification of what they are, what you need to do in relation to paying your employees, and the steps needed to complete the ATO forms. So just remember, there's a lot of upcoming dates that you need to make sure your employees are paid before, and you don't want to miss any of these because that can impact on what you can claim for JobKeeper. So again, ask us if you're not sure. And then the next thing is really the gradual return to normal, or what's going to be known as the new normal, because it's not going to be the same. It's going to be what we're used to before lockdown. There's still going to be financial impacts. JobKeeper is not going to be around forever. So just a reminder, it's really important to look at your cash flow to make sure you still have enough, not only for the next few months, but for when this staged return happens. What's it going to look like? Are we going to have some people working from home? Are we going to have people coming into the office at different times? There's still going to be social distancing for a significant period of time. So even when we're returning to normal, your cash flows might not be the same as what they were before in the old normal. So we've said it before, and we just remind you, just look at your expected cash flows and inflows, both in the next couple of months and also until at least the end of this year. You need to talk to your bank's financiers about extension of terms. What new costs might be incurred in relation to returning to what's called the new normal? There's an additional expenditure you've got to invest in. What will the revenue be coming in? So just look at your forecasts, and it's really critical that you build some flexibility into that. So if your revenue is to fall by X% in a particular month, you can just plug something into a cell in a spreadsheet and it'll spit all that out. What if expenses increase by Y% in a particular month? Again, you want a model built that can you just input that and it'll spit out the answers for you without having to rebuild various models from scratch. We've been helping a number of clients with this. So if you do need any help, or you want a model, or your model reviewed, or a model help, assistance with a model, please let us know. And lastly, as an editor, I want to remind you, forget about the upcoming June reporting season. We'll still wait to see if there's going to be any extensions to June year ends. Of course, ASIC, ACNC, and state regulators have come out and talked about December year ends. No one's come out at this stage about June year ends. We'll keep you updated about that. But just a reminder, there's 3 new accounting standards to consider, and there's also the impact in financial statements, both the numbers and disclosure of this COVID-19. And the 30th of June will be here before you know it. So there is the best time to get on top of this. We're still early May, If you haven't looked at the new revenue standards, the leasing standards, what the impact of COVID-19 might be in the financial statements, I recommend you do that as soon as possible. And if you have any questions, let me know. Okay, so that's all we've got for my part. Now I'll hand you over to the part that you're all dying to hear, and that's Mariana. So Mariana, over to you.
Thanks, Aidan. And thank you everyone for joining us. Yeah, it's a cold morning, but we're all inside, so that's a good thing. Today I just wanted to highlight what's changed and also just go through some of the rules because some people may have joined us for the first time on the webinar. So our presentation is not very detailed. It would take too long probably to go through the detail, but it's really more at the end of my presentation is if you have specific questions that I can answer, I'm happy to do so. And I have received some answers prior to this presentation. I will attempt to answer those as well. So feel free to start asking your questions in the little question and answer Q&A box while I'm talking. So eligible employers. Do we have an eligible employer? By now you think we may have determined that, but not necessarily. I have probably 2 on the go at the moment, which we're trying to get clarification on some points with the ATO. So it's not always as easy as it seems. Like when you look at it, you think, okay, I'll just take my March 2020 figure from the BAS. I get my G1. If you go to the BAS, I go, okay, I'll take my total taxable supplies that's sitting in there because March is already gone, right? So we're good. I'll take my total taxable supplies. I take off my GST. I add my GST free. I take off my input tax. And because this is modified, I add my donations and bequests, potentially. All sounds very good. Now, then I go to my March 2019 and I do the same. Now, we have asked questions to the ATO where we have had some differences, as in a lot of not-for-profits receive funding, government funding. And prior to the rules coming out that, you know, you can exclude your government funding, we were of the view that you might receive an amount in March 2019 and you didn't receive the same grant in March 2020. And that could be because there was a one-off in 2019. It could be because you received the funding in February 2020. So many different ways you can look at it. And effectively, by the fact that just by luck, you got something in March 2019 versus March 2020, you've had the drop in turnover. And so, wow, you're in. How easy was that? Bang, off you go and enroll. And I'm sure a lot of people are doing that. When we inquired further with the ATO, before the law companion ruling came out, Monday, that came out just this Monday, they gave us different responses. So one response was, well, if it was one-off in 2019, it wasn't comparable. Question is, what is comparable? Because, I mean, it just says in the legislation comparable is a month compared to the month of 2020. So that doesn't sound right, but the word comparable in itself, do you take its meaning? So it got a bit confusing there, but in most cases what we were able to do is go, well, okay, we may not meet the basic test, but let's go to the alternative test because that's what it's there for. And so organisations would have passed on that, potentially. Now on Monday what's happened is that the Commissioner's brought out a law companion ruling, and I'll go through that in a minute. So those are some of the things that we've been struggling as professionals, and I'm sure you've all been struggling with when you're looking to assess, because you're all trying to do this in good faith. And the JobKeeper, we must remember, is there to help the economy. So long as you're not rorting the system and you're not making something fit because it doesn't fit, well, then you should be fine. Also, your numbers don't have to be affected because of COVID-19. That's not the aim of JobKeeper. It's there as a package because as such, your figures at some point will be. But it doesn't have to directly relate. So what do we've got? We've got the 2 weeks ago, we got the alternative test, which was great, and I'll go through that. One thing, as an eligible employer, we need to make sure that we've paid $1,500 for our employees to start getting it, should we have met the criteria in March or April. or April to June. Now, $1,500 a fortnight for the month of April, the tax office is very lenient, and it says that you can pay the top up until the 8th of May. And I'll run through at the end just about, how you might show it in your single touch payroll for your payroll providers. Then you've got eligible employees, they must have been employed 1 March, Australian residents, etc. And the new thing that came out, which I mentioned last week, was full-time students who are 17 years older or younger, 17-year-old and younger, what that means, less than 17, and who are not financially independent. So this doesn't apply if they are financially independent. And you have to make sure you've received your nominations for these eligible employees before they're eligible for JobKeeper. Now, one thing to note there is that if an employee, and you may have some employers that just don't give you that nomination form by the time that you require it, being the 8th, or you've got to enrol them and you don't know whether to enrol them or not, then if you haven't received the nomination, they're not in JobKeeper. Now, potentially they could be in the following month if one is they've been topped up. But the point is that if you don't get the nomination and they're earning under $1,500, you're not likely to top them up. And you've only got till Friday. There's no extension on that. So past eligibility. So what's next? Okay, so you've passed it, you've enrolled, you've got till, it's interesting because you've only got till the 8th of May to make your fortnightly payment, but your enrolment form, you could have it in place by the 31st of May and elect your employees by the 31st of May. So timing doesn't really work for those people that have to get topped up. So if you don't have to top up your employees, you can enroll by the 31st of May. What's the problem with doing it 31st of May? Well, how I see it is that your eligible employees for April and May will get you'll get your JobKeeper payment, but you won't get it until the first week of June. Hence why I suggest if you want to get your money in now, in next week, is you make sure your enrolment is done by the 8th, your top-ups are done by the 8th, and your nominations are received as soon as possible by the 8th. Now, when I say received, I don't mean that you necessarily have to have them complete and signed and on your records. The ATO accepts that as long as you've communicated to the employee, they send you an email saying, yes, they've read that, they acknowledge they're eligible and they haven't nominated any other employer. So if we go to the next slide, as we said, what some organisation is struggling on, what is the basic test? And as we said, what is the, how do you calculate your projected income or your actual income? What figures do you take? And I've run through that already. So what has come out is calculating, what has come out to assist is calculating the decline in turnover test. That was released on Monday alone. Now, when you read it, it's pretty complex and it's GST talk. So for those GST experts out there, they're saying they're loving it. I spoke to our GST expert about it, just to clarify. But just one thing to watch, if you've already enrolled, do not panic. Do not go back and change your calculations. If you've based them and they're reasonable and you've got documentation to support it, don't go back and change things. This is simply there for those who have not yet done their calculations. They're still trying to work out this whole thing that I was talking about when grants are coming in, when they're not. And what it gives you is a choice of how you can calculate your turnover test. And it uses different methodologies. It uses accruals, it uses BAS method, and etc. So potentially, you could use what I've just described as your BAS, and you potentially could be safe. Now, I say potentially because in the legislation it says, accordingly, this ruling outlines alternative methods, not alternative tests, alternative methods for calculating the basic turnover, if applied in good faith. Well, what does good faith mean? Well, you did it in good spirit, like not to contrive anything. Always a question mark on some of these meanings and what they actually mean. But I think in some cases that ruling may be too late for some taxpayers because they've already gone through the process of enrolling and they've already gone through and assessed. But if you're having any issues with now at this moment, you're still calculating, still wondering whether you meet the criteria, that's probably when to come and have a chat with us. Now, the Commissioner has said in that ruling that this is just a guide to assist. If you've already applied the rules in a different way, do not panic. Do not go and change it. Okay, so they've said that in the ruling, and he said it in a press release with the Accountants Daily as well. So there's many places that we can find that. Now, alternative tests. So if we can't meet the basic test because we haven't got a comparable period, and I question what is comparable period now, but let's say, for example, you are a startup. Let's say you do have had a restructure. Let's say you've effectively, I don't know, had a real increase in your income, or you've got irregular income, lumpy income. Okay, those are the kind of things they're looking at. Do you need to seek the Commissioner's discretion? Because this alternative test is a Commissioner's discretion. The answer is no. So the discretion is there, but only for certain types of entities that meet a certain criteria. You cannot go to the ATO and ask them for their discretion on your basis because of your situation. Okay? That's not the way this is intended, the law is intended, because they don't want an influx of, remember, this is only for 6 months. So, you know, they don't want to be dealing with Commissioner's discretion case-by-case basis. So they've really, really put it out there for entities that have something different or unusual about them. So if we go to the next slide. So remember the basic test legislation came out, then the alternative test legislation came out. And each one of these is a test that you can apply under the alternative test. Now you could choose, you could fall into 2 or 3 of these categories, and you can choose only one. So the one that fits the best for you. So again, if you go through these categories, commencement business, self-explanatory, you just didn't have a comparable period because you didn't exist. Acquisitions and disposals, and to dispose of part of their business and acquired or disposed of change the entity's turnover. So it's a part of your business you sold, not your whole business. So question mark how that would work. Restructure your business. So where you're already, you have a 100% owned business and you restructure. So you restructure part or all of your business. Substantial increase. So this is where you've been growing. So you didn't start up, but you've just maybe added a new product line, a new service a year ago. And your income is not really comparable because you're increased substantially. So this is a good one to use for that. How these tests work is they have a test in the test, if you like. So you test to see if you're eligible, and then you use the comparative that they suggest. And then irregular turnover. Non-cyclical businesses has irregular turnover. So what's a cyclical business? To me, a cyclical business is, and they've named it like more the farming, more that you grow things or certain times of year. So if you compare March to March, year on year, you're probably going to get a very similar result. That's when your big revenue comes. So you wouldn't be able to use this if you have cyclical income. Small business and partnerships, again, not relevant for not-for-profits, so I'm not going to go through that. But very important, if any not-for-profit itself has gone through a drought and natural disaster and they've suffered, and you know it's declared in that particular zone and that information is all available, you can also get different treatment. So something to watch out for. The next slide, please. Then what happened 2 weeks ago, or was it even 2 weeks ago? Who knows now, because it still comes out so quickly. It's probably last week. There's a new ruling that came out for service entities. So in some cases, some not-for-profits do have service entities that they deal with. So what that means for those that aren't quite sure, so service entity is the labour hire entity within your organisation. It is probably more seen in the for-profit, but I have seen it in the not-for-profit as well. So I like to mention it here. Again, it works where you're tax consolidated or consolidatable, meaning you're 100% owned entities, or you're a GST group. So you have to fit into one of those categories. If you don't fit into one of those categories, I have an alternative that we could look at. But effectively, if you fit in that category, it looks at the operating entities that deal with this service entity. And then they get all the operating income for March, for 220, for those entities that deal with the service entity. So the operating entities, I call them. They call them test entities, but it doesn't matter what you call them. And you compare it to the prior period. Now, what's interesting about that one, and you might meet it or not, what's interesting, what they do acknowledge is under this alternative test for service entities, is that the service entities themselves, like the whole group might have gone through some sort of change or restructure. So you can apply one of those. So once you meet that service entity test, you could apply that test even further to one of those other 7 alternatives I had on the page before. It gets really tricky, but all I'm suggesting is there are other opportunities there. Then what happened was at the same time, no, just on Monday, this PCG came out. And what it covers is a practical compliance guideline. And it says schemes in relation to JobKeeper. So what are the schemes they're looking at? And whether they're going to apply high compliance to it or not. So a scheme is effectively something that you've put in place that doesn't meet the regulations. It doesn't meet the law. Normally that's a no-no. But what they have said here is where you have a service entity and you are dealing with your operating entity, and if in effect, you know, what you do is you don't meet the criteria of tax consolidated, consolidatable, or GST group, but you've got a genuine group happening. What they've shown in there that there might be what's considered a scheme is that if you get the operating entities and they had a fall in revenue, you applied that fall notionally to your management fee. So you did the calculation based on the fact that your management fee would have reduced. So you may not change your contracts, but you may actually just change your management fee accordingly to show that the service entity itself has been affected. Now, the ATO has said that they're not going to review this or spend any, it's very low risk. So that is an opportunity for some service entities out there that don't fit right into this criteria. But that is something to be very careful about and something to discuss with your advisors. Now, with a lot of these new legislation that came out just recently, is that, you know, registered charities elect to exclude government revenue. Now, remember we had the media release. Now there's a little bit more detail on this. So we have the explanatory statement, they call it, and we have the legislation. Previously, all we had was a media release, and you remember the fact sheet question and answer from Treasury. So what they're saying is that registered charities can elect to exclude government revenue from their turnover test. We already knew that last week, so nothing new there. But if you do exclude it, you need to notify the Commissioner. Now, it says within 7 days in the legislation, but I assume they're giving us all this time. We might have until the 31st of May. So if you have done your calculations of excluding government grants when you've met the JobKeeper, you know, the turnover, the decrease in turnover test, then there will be a notification you have to make by the 31st of May. I don't know what that notification looks like. We haven't got anything in place right now. I haven't seen anything in the business portal, but have a look in the business portal to see if there is a notification. I'm sure something will come out in the next few days and we'll have something we can share with you. Just another interesting thing is that, you know, with employees, it's 1 in all in, as I was talking before. Now that means you have to, if you have 30 employees in April and they all meet eligibility, so they've given you the nominations and you meet as an employer, then effectively you have to pay the top-up tax for them by the 8th of May. Now, if you didn't have the money, that was a big issue. So the ATOs have got all these hotlines with the banks, and I've been assured by our debt advisory that the banks are sending money. If you've got a link to a bank, they are giving you money. So how the banks are doing it and how they can act so quickly is that they're putting their bank details on the enrolment form. So they get the JobKeeper payment. So they give you the money to pay JobKeeper and then they get it back when the government gives them the money. So that's why they're doing it so quickly or able to do it quickly. So as I was mentioning, all in, 1 in, the rule. So the question becomes, okay, so 1 in, all in. So I have to get all my nominations in. What if I don't get a nomination, as I covered before? If you don't get that nomination and you've rung the employee and they're not they're saying they're not going to do it, well, they're out. They don't get it because you haven't topped them up. And even if you have, they're out. You don't get money for them. So unfortunately, it could be your loss because they might be over $3,000 already and they're just being stubborn. But you need that nomination form because you don't know if they're electing another employer, and that's accepted and that's in all the information in the tax office as well. So the concern was that if someone didn't send their nomination, would that mean that no one's in? And the answer is no. The other thing to watch for is where you exclude government grants is if you exclude government grants, potentially you can exclude certain employees. Now, and that is those employees that these grant money relate to, and you know that it relates directly to them and they're getting paid from that grant money. Now, this is, you can exclude, you don't have to. So that's something to consider and read the rules closely. Again, JobKeeper payments made to eligible registered religious institutions. So you have to be a religious institution. If you pay a stipend to anyone else and you're not a religious institution, this does not apply to you. And I don't think that's a salary and wage, unless you know otherwise. Institution in respect to non-employee religious practitioners. So again, you know what a religious practitioner is. And this one, the next one is for overseas aids. They will meet the criteria for not-for-profits effectively, and they've been brought into the pool, if you like. And including core government financing assistance provided to universities in their turnover. So universities would normally be excluded from the 15% decrease. So they normally they have to look at 30% decrease, and you include the government financial assistance. So there's a lot of organisations that receive different things, and it's a question of whether you include it in the calculation or not. I think the main thing is whatever you do, just support. Do the comparable in the same way and support what you've done. Okay, and the simple thing to do is do a calculation which is easy to read, put a paper together and put that on your records. Make sure the board's seen it. Is everything bulletproof? No. But I think the main thing is, and the Commissioner has stated, is about you being able to show your reason and was it reasonable what you're doing. Now, one thing that I'm really struggling with at the moment is bequests. So we asked the question to the ATO, can a bequest, which is usually by will, is included as a donation? And they said yes, and that's what I reported on here. We've asked the question again. And now let me just see if I've got an answer from one of my job advisory people, because they've been looking at this. I don't think I've got anything. Okay, so this is just straight off the cuff, right? So what we asked the question to our not-for-profits. We said, because there is something in the, the DGRs, you look at table 30-12, and it says that a client is a DGR and therefore under the JobKeeper rules should include all donations for which effectively the recipient would get a tax deduction for. Then section or rule 8F says, described in an applicable item of the table in 30-12 of the Income Tax Assessment Act. So a donation that's sort of listed there. Then what we found, after they'd answered that question, we found in there, in the actual legislation, 30-15, it says, says that subsection 2 of 30-15 states that testamentary gifts or contribution is not deductible under this section. So we then went back to the ATO to say, are you sure bequests should be donations? And they've been flip-flopping around and they haven't given us a straight answer. Initially they said, when we asked the question, oh no, bequests shouldn't be included. And then they've actually just responded now saying, we're waiting for something in writing, by the way, for this. So then I can circulate it when we have something in writing to confirm. Short story is bequests might be included, more information to come. So as you can see, they're rewriting the policy, it's been escalated. So they themselves aren't really sure. So it's quite interesting. How do we deal with it? Well, I think if you've included it in your past, don't worry about it. Keep going. If you've found that your calculation tethers on bequests, then you could almost say that you have to wait for this thing to come out in writing unless you've met some other test, alternate test. And if you've met some other test or another month, then the question will become when it comes down to the point of if they get an audit, well, what was the information you had at hand at the time? And you can say, well, bequests are part of donations, and we got confirmation from our advisor or HLB manager because that was what was available in time, and we have an email to that effect. Now, and that's why I say it's just a matter of do bequests make a big difference? And they can. And this is why we ask the question, because you could get a bequest of $1 million in March 2019 and not get any bequests in 2020. And to me, that's comparable because that says it's a donation and you include it. But say it's the other way around. And you get the bequest in 2020 of $1 million. It's not very helpful. So you want the answer to be, well, exclude it, and then you don't have to even worry about it. Because bequests are a bit of an unknown, aren't they? If you try to do a projection on a bequest, how do you do that? So for those that don't receive bequests, don't worry about it, but it's something we're struggling with because we're getting contradictory information. So as soon as we get that in writing, I'll share that with you. I just wanted to give you an idea of what we have to sort of struggle with here as to some of these questions that we're getting. So go to the next slide. So we do provide assistance, and we can review calculations and provide paper for the board. It can be as simple as G1, but adding and taking off. But as you can see with your bequests, it can be another question. I like to do the calculation in many ways, so therefore I've got some backing, or you have some backing. So what to do? If you've already established your eligible employer, that means you have worked out your turnover test, then you should enrol. And you should do it by the 8th, even though you have to the 31st. Now, I have seen that some people have already topped their employees up, but they haven't enrolled yet. Fine. If you want to wait till the 31st or a bit later, there's no issue either. Oh, they're already asking the question. I must be running out of time. Okay, so with JobKeeper top-up, make sure by the 8th of May, elect your eligible employees on your single touch payroll. Employee nominations, we've talked about that. And big thing as well, when you're filling out your STP and what's available in your portal, and some of you have probably already done it, is you work out your monthly declaration forms. So they've got to be submitted by the 8th of May to get your money as well. What it wants to know what your income was in April and what your projection is for May. There are any projections, by the way. So the first thing is we've got the polling question up again. So somebody keeps pressing that wrong button. But anyway, basically just to be aware of is when you're doing that, use the same basis, or the same logic, I should say, that when you calculated your decrease in turnover. So if you used your BAS amount and then took off GST and so on, well, maybe use the same logic when you're calculating what you put into the actual and what you do in your projections. And what you can do is you could use the, I'd use just the same logic when you're doing your projections. Again, this is only information gathering. Do we have another slide? I've still got the poll up here.
Yeah, do you want me to end this poll? Because that's on this slide for you.
Oh, okay. Well, okay, yeah, so if you need assistance with the projection GS turnover, if you could just let us know. And what we will do is give you a call. So if you don't want us to call you, just say no.
Yeah. It's just running through now, Mariana.
Okay, great, thank you.
Okay, I'll end that poll. And next slide, Mariana.
Yes, so next slide, please. So as I mentioned, just some of the things we're doing for clients, preparing or reviewing their modified GST turnover, looking at their calculations or just doing their calculations and actually just checking some status. So some people have been asking about what's regular and systematic. Okay, if you'd like to take up this offer, meaning assistance, please say yes or no in the poll. And if you don't want me to give you a call, please say no. If you do want me to give you a call or someone to give you a call, please say yes. If you're unsure, tick unsure. And I'm not sure why you'd be unsure, because maybe you're not really sure yet. It's a tricky one. If you go to the next slide.
I'll just run this poll because there's quite a few people participating. And I'll end that poll now for you. This is our next slide, Mariana.
Yeah, thank you. Questions?
So we'll start the questions
first.
Do
the questions, before the poll. That'd be great.
Okay, all right. So we've got a number of questions. So the first question is, for Charities, they announced about not recognising government revenue for testing for JobKeeper payment. Can you please explain more about this in detail, like what income not recognised, etc.?
Yeah. So if you look at it, it's government grants or revenue from government organisations. And if you look at that, it's really local government, state, anything to do with governance, NDIA. Now, what's interesting is the LCR 2020-21. I think it's in there. Let me just see if that was, it's in that one, which actually says government grants. And this is a GST definition of government grants, right? What you include and don't include. And it's always been the case. So if you go back to your, let me explain it this way. If you go back to your BAS, have you included your government grant in your BAS? Now, the question might be, did you include it because it's a taxable supply and you had GST included in it? And you know there's GST in it. Tick. It's a government grant. Now, you'll know if it's a government grant because it'll come from a government organisation and it's revenue. So the next question, so if you have a specific question on a specific grant, that's probably a better way to look at it. Next way to look at it is the government grant a GST-free grant? Because it might be from a GST-free supply, so health. If that's the case, you might have included it, and you've checked this out, and you've included it in your GST-free. Now, there are certain types of grants that are not either of those two, and they're just not taxable supplies. So they don't get included in your business activity statement. But some of you may have erroneously included it as GST-free, for example, and that can be easily done because it's quite tricky, those grants. But it says in the LCR, so if you go to the LCR 2021-1, Law Companion Ruling, you just type it in on your Google, Dr. Google, and it gives it to you. It says here, government payments made to you that are not consideration for supply are not included in the calculation for your GST turnover. So basically, and then they go on to say the JobKeeper payment, cash flow payment, they're not included. And they say that the early childhood education and care relief package paid to approved childcare providers is not. I know they've mentioned that an advance payment, not an NDIA payment, but an advance payment of NDIA is not GSTable either. So therefore, it's not a taxable supply and it shouldn't be included. It's not even a grant, you know, in the sense of you're not excluding it because it's you've got that choice. It's the fact that it just wouldn't have been included in your calculations anyway. No? So my understanding, because we are basing it on the GST and what is taxable, some of those grants would not be included. That's different to say when you have government grants that are taxable and you're actually making the decision to exclude it from the calculation. I hope that makes sense.
Thank you. Our organisation has enrolled in the JobKeeper payment program. We have been told that we need to update eligible employee information on the ATO business portal. We have had a look on the portal, but couldn't find where to upload this information. Can you assist?
Yeah, so What they're really referring to there is that if you're not, so if you're on single touch payroll, that's going to deal with the eligibility of your employees. So when you enroll via the portal, it asks you how many eligible employees you have. You may have put 20 in there, but the reality is you may not have received all your nomination forms. You got trigger happy and decided oh yeah, they're all going to be in. So when you come down to electing who your eligible employees, you need to have paid them and you need to have your nomination at least back or know that they're going to provide that nomination for you. Now, in effect, you have to go to single touch payroll to do that. In single touch payroll, you look at, is it updated for JobKeeper? In most cases, everyone I've spoke to, it is. So if you're ticking it off through your single touch payroll, there's and every software is different, but effectively what you're doing is you have to go through and elect under the Pay Anyone section, elect eligible employees. So if you're entitled to this JobKeeper scheme from 30th of March, you click on that box 30th of March for all those eligible employees. You have to be very careful when you do that because you can't then take them out. But you can take them out if they're no longer eligible, as in they resign or something along those lines. And that's why you have to maintain every quarter, you have to maintain your single touch payroll, or sorry, not every quarter, every fortnight payment to make sure that they're still eligible employees. So that's where you tick it off. The only time you go to the portal is if your single touch payroll is not updated for JobKeeper or you don't use single touch payroll. So I hope that's clear.
Thank you. Got a question for Aidan. The JobKeeper payment and cash bonus, should it be recorded as a separate revenue item on the P&L? How would you record this?
Very excited, Kim, because I've got a question. So here we go.
Calm down, calm down.
I'm going to try and drag this out as long as possible. Okay, so the JobKeeper, how is it recorded? It is recorded as revenue. I agree that it should be recorded as revenue. The question is how you should disclose it. Now, some entities choose to have in their P&L and the statutory accounts, they say revenue and a note number, like note number 2, and note number 2 will break that revenue down into the components. Some show it on the face of the P&L, they show the different components of revenue, then show total revenue at the bottom. Either's fine, you get a choice. What I think should be happening with this, all this stimulus stuff, is that it should be shown separately, because you got transparency to the users of the accounts, and this shouldn't just be bundled in other revenue. I think it should be shown for transparency reasons as a separate line item. It depends on materiality, how material is to your accounts, but if it's material, I'd be showing it as a separate line item. Now, whether you want to show that in the note, so it's in note 2, or it's in the face of the P&L, it's up to you. It might be that you want it on the face of the P&L so people can actually see, looking at your accounts, what that number is. So they're looking at your surplus or deficit for the year, they can see clearly what this JobKeeper and other stimulus payments are. So they can, it's very clear to the user of the accounts what that is, they can see it at a glance. Whereas if it's hidden in a note, you just show total revenue, it might not be as transparent. So you do have a choice, whether it's in the face or in a note, but I think you should just consider about the materiality of it and what's the message you want to portray to the account in the accounts as well, to the people reading the accounts. Do you want to show what your surplus deficit was before this amount? You can do that too, and then show this amount, or show it clearly on the face of the P&L.
Thank you. The next question, there seems to be, it's a similar question, so I might just ask it like this. So a part-time / casual employee signed the JobKeeper employee nomination notice. She does not have general deduction on her tax file number declaration, which indicates that she may have another employment.
Yeah, it's an interesting one. You could get confirmation from the employee, but the point being is if you have a casual, not a permanent employee, but a casual, they may have a permanent employment somewhere else. So they may have nominated that, but even if they didn't, they can't elect to be under JobKeeper if they have permanent employment somewhere else. It's not, you are not required, basically they can only get it from their permanent employer. So in effect, if their permanent employer doesn't meet JobKeeper, they don't get it at all. So it is the employees has to fill these out correctly. It's really up to them. They're the ones that will get into trouble if they were incorrect in filling them out.
Mariana, when is the deadline to receive the nomination notice back from the employee?
Well, it was 30th of April. Now it's gone to, I would say 8th of May, because they say 31st of May you can enrol and elect, but for the purposes of employees, and that works well for sole traders and so on, but for the purposes of employees, you have to have that nomination form to make the payment, because you're only going to make the top-up payment, if that is what it is, by that time. So say you've topped everyone up, I would say that if you've topped everyone up and you're sort of happy that, you know, all these staff members are going to be part of JobKeeper and you haven't got all the nominations back, I would probably get an email from those that you haven't got a nomination back from, and an email would be suffice for the moment, so you can feel comfortable. But effectively it would have been 30th of April. They just gave us an extension to 8th of April. 8th of April to make the payment, but you really have to have the nomination to make the payment.
Cool. What will be the process if a nominated person in the JobKeeper scheme either resigns or their employment is terminated? Do we still need to continue to pay the $1,500 every fortnight until the end of September?
Yeah, so no, is a simple answer. So all this is governed or controlled by the single touch payroll. So effectively, so whilst the employee is eligible, mean they've nominated themselves, you as an employer or the payroll person has to go in every quarter and say, are they still employed with us for this fortnight? Not every quarter, sorry, I keep saying that, every fortnight. So the fortnight was for April was the 13th of April and the 26th of April. But obviously, you know, no one had time, the rules didn't come out, so they've extended all that. So they made it the 8th of May. Now for May itself, when you have to go down the payroll, is that every fortnight, so the 10th of May, and I think I wrote it down here, the 10th of May and I think it was the 24th. Now I've lost my piece of paper, typical. So yeah, 10th of May and 24th of May, they're the 2 fortnights for May. So technically, you would be going into your single touch payroll, you would have topped your staff up in those quarters, in those fortnights, and you would have also selected in there, again, there's a spot where you've elected them to say that they've resigned, the date they resigned. So they no longer get JobKeeper. So you no longer have to pay them JobKeeper. If you know, they say stood down and they're not getting a salary and wage.
Yeah. If our projected income will be down more than 15% in July 2020, can we register now and claim JobKeeper payment in August?
I don't think it's available yet to register. So how it's going to work is that, say for example, you missed out April, May, whatever, for whatever reasons, and you're going into May itself. Well, I think the registration, you have to register in the first fortnight. So by the 10th of May for May, and you make your projections. Now, I think they will allow you to register by the 26th, the second fortnight as well, by the way. But make sure that all your top-up payments are made by the 26th of May. So it relates to the first fortnight and the second fortnight. Now, what that means is that if you're paid monthly in the month of May, you would pay them as normal, but you would allocate within your payroll for those fortnights, and the system will allow you to do it. You potentially could tick a box so that it aligns with those fortnights. But at the moment, you've asked me for July. You can't enrol yet. But if you're going to enrol to get the money in August, you would probably have to enrol before the first fortnight of July. And that's listed in the ATO website on the dates. But currently, it's not available in the portal. So if you go to the portal, you won't be able to put a date in. So that's when you know, is when you look in the first week of July, you go into your business portal and it'll be accessible at that point.
So the company enrolls into the JobKeeper scheme in May. And in the first fortnight in May, the company pays the employees as normal. If the normal pay is less than $1,500, can the company top up the variance in a separate pay in the same month?
Well, strictly speaking, you should be doing it in the fortnight, but the Commissioner allows you that if you pay less frequently, so long as it relates to those fortnights. So I would say yes. I would confirm this when you get closer, because if you haven't paid them by the 10th of May and you know they're in the JobKeeper, you can top them up by the 26th of May. So long as you do it in the first 2 fortnights, then I think you should be all right. That probably just needs a confirmation. You should be topping them up every fortnight because it's a fortnight payment. But again, I think the ATO would be a bit lenient so long as they've paid by the 24th of May, which is the second fortnight, and you might allocate it between those 2 fortnights within your systems.
Okay. I think you've also then answered the next question too. After registering for JobKeeper payment based on projected revenue, and if we found out later that our actual revenue is more than 15%, what are the consequences?
Yeah, and is this for the purposes of just your declaration, or are you talking really more? I assume that you're talking about when you're looking at your 15% decrease in turnover, or you've projected for May and you're enrolling in May and you projected less than 15%. Well, I guess it comes back to a time and a place. So a point in time, as the ATO put it. So if you projected, let's just assume for May, so you're not enrolled, you didn't meet the criteria prior, and you couldn't go to alternative test. So you're looking at May and you're thinking, okay, I need to make a projection. I think I'm going to meet it. I'm pretty on the ball. I know why I made those projections. So the thing is, document your projections. Why did you make those projections? Why did you think it was going to be what it was? That's key to all this. But if you do project and you are out, you still can get the JobKeeper and you're still entitled to it. The Commissioner may, at some point down the track, review you and ask the question as to why you thought it was reasonable at that time. So that's why I said just support it by documentation. Now, if you're wildly different by 10 or 15%, I've got to ask, you're not very good at your projections. You probably need our assistance. But if you are for some reason, so what is a good reason would be, say, for example, the ATO come back and say, yes, bequests are supposed to be donations, like they said, and you suddenly get a bequest that you didn't expect. That's a fairly good reason. And, you know, I would continue to get it, but I would just support your claim. And maybe you can show in the later months that you also reached it. There's many ways to show this though. So again, if you're having that problem and it does occur, come to us and ask us at the time.
Okay. Next question. Hi, Mariana. This is Ho Shang. In the ATO JobKeeper application, there are a couple of steps. Step 1 is when you nominate the number of employees, the month of the downturn in revenue. I would assume that this needs to be done by 8 April. Step 2 is when you need to add the actual details of each employee, the BAS amount actual and the BAS forecast. My question is when is step 2 due?
Now.
Is it the 31st of May?
No, now. This is a confusing thing, but yes. So no, you need to do that now to get your payment for April now. So my understanding is that you've got to make the payment, right? So if you've made the payment, so step 2 is when you need to add the actual details of the employees. So that's through your single touch payroll. So once you're paying them the top up, or if you've paid them the top up by the 8th of May, then you would have had to elect your employees. So you're going through and elect. Now it does say that you've got to the 31st of May to elect your employees. So it could be possible that you've already topped your employees up, okay, on the 8th of May, but you just haven't done that extra step of election. And now I don't know why you wouldn't, but maybe because you haven't got all your nomination forms. But then I would say, why did you top up if you haven't got all your nomination forms? So that'd be a big question. But the thing is, you do have till the 31st of May, but the problem with that is that you won't get your JobKeeper payment for April or May until June, first week of June. So my stance on this is that do it now so you get your money next week. That's a simple answer, practical answer.
Thank you. Mara, could you please explain a little more in regards to the projected monthly declaration form? Is it something that must be done on the top of our quarterly BAS return?
My understanding, it's just via the portal. So it's a very simple transaction where you just put in your projections. I mean, I've had copies of them sent to me. So you just do it in your business portal. So I just go into your business portal and it says, look at what your actual earnings were for April and calculate it in the same way you've calculated your decrease in turnover. It's not a retest, just remember that. It's not a retest. You've already passed the test. You don't need to retest. If you met it in March, April, or the quarter, you're fine. All this is asking is for information. So therefore, you project what your May, and it's only projection. Again, you project without GST, you put your taxable supplies, you include your GST free, you take out your input tax, and you include what donations you might think it is. Now, if you'd included bequests, include if you think you're going to get a bequest. Now, you don't know that, so you probably wouldn't include it. Does that make sense? So yes, go through the business portal and see it's available now. So you should be able to do it through there. You won't be able to do that, I don't think, through single touch payroll. But what a lot of payroll providers have provided is a little bit of a step thing. So when you go into pay like Xero for pay employer, it actually links you to the business portal or it links you to different things. So it takes you through the steps. So I would do that step. Either you go to your business portal or you go through your Xero or whatever software you have. So depending on the software. But the best way to do it is do it now before Friday. It won't take you long to do and go through your business portal.
I just wanted to bring this to our attention to panellists and participants. It is now 10 o'clock. We've still got a number of questions. If you need to leave, please do so. But I'm sure our panellists, we've got another 5 questions. So we'll keep going. And to those that do need to leave, then we will be providing you with the recording and the presentation shortly after our webinar this morning. Mariana, this question is in regards to the new code of conduct, and we may need to take this offline. So the question is for the rent relief for COVID affected by an organisation that's covered under the JobKeeper scheme. So the National Cabinet Mandatory Code of Conduct says that eligible businesses for the purpose of the Commonwealth Government's JobKeeper program can seek rent relief. Does a company have to prove revenue drop of the 15% each month, or are we just eligible once we are in the JobKeeper scheme?
No, it's a code of conduct. You have to really approach your landlord. So the landlord basic will ask you information. And look, I haven't read the legislation. I'm not a commercial lawyer, but effectively from a practical perspective for those landlords that I've spoken to, is they're really going to probably want to know, okay, are you an SME, turnover under 50 million? Yes. If you're over 50 million, this doesn't apply to you. And it'll be aggregated turnover. And it also look at, okay, have you had the drop? So they might ask for those calculations to show them. And then it's up to them and yourselves to negotiate what that looks like from there.
Thank you. If a company becomes eligible in May, start to top up in May, can the nomination notice received after 8 May?
Yeah, I mean, I think you could probably top up by the 24th of May, the second fortnight, but I would send out your nomination forms effectively. That's what I'm saying. I think that is, so long as they're topped up in that month, they should be fine. If you've told your employees you're going to be eligible and you've sent your nomination forms out and you're just waiting for the nomination forms to come back in, if you have them by the 10th, fine. And this is for those that haven't enrolled and they're enrolling later. I'm sure more information will come out whilst this big rush is out. But to me, it reads the legislation that you can make that top up by the, it says every fortnight, but you should be able to make it by the 24th, which is a second fortnight. Don't go over that. Make sure you stay within the fortnights.
If we have lodged our monthly declaration for April JobKeeper today, the 7th, when do we expect money from the ATO?
Next week, if you haven't already received it. So they say that they have 14 days to make the payment, so at the end of the month. So by the 14th, you should have got your money. And out of interest, maybe we can have a show of hands. Has anyone on this call received their money? I know there's like a little hand thing that you can, a polling, not a polling, but you can
There's
just
a
put your
raise your
little,
hand.
raise your hand, that's it. It's a raise your hand. I can't see any hands, so I don't know whether no one's received it. Yeah, I don't expect it'll be in there till next week. And the reason I say that is because, 8th of May is the deadline date, which is this Friday.
Okay, so that's the end of our Q&A. There doesn't seem to be any questions in chat, but we've got 2 questions that were sent to us. Is it all right if we do a separate catch-up payment for all top-ups of May at the very end of the month when we are reasonably sure we are eligible employer? This would be after our normal payroll run.
This is for May, and this is assuming that you've not already enrolled. This is not for April. No. So there's no extension for April to the 8th of May is the last date. You can't extend on that because I know there was a question on that. If you're looking at May, you have to pay within the fortnight. There's no extensions given. That was only an extension for the purposes of April itself. So, if you want to play it safe, make sure you pay it in the first fortnight of May, being the 10th. Now, if you haven't paid it by the 10th, I think they'll make an exception to that. And as long as you pay it by the 24th of May, the second fortnight, then you should be fine. But I would not leave it until the end of May, because then you may not qualify.
Okay, so that's the end of our questions. Mariana, did you want to run through the monthly disclosure poll that we're just about to launch? Thank you. And I'll launch it while you're talking.
Yeah, what I just wanted to sort of get a feel for everyone attending is that, do you understand from our discussions, do you understand what you have to do on a monthly basis? Because only for 6 months, you're going to have to report through the business portal what your turnover within 7 days, so within 7 days at the end of the month, so you have 7 days to do it, is to report what your turnover was for April and your projections for May. So at the beginning of June, you'll have to do the same, report what you made in May and then project. Now, if you need assistance with that, really what we're asking is say yes, no, or unsure. So if you do need a bit of assistance with that and do you understand it and you're okay, you know what you need to do, then you say, do you understand it? You say yes. And if you're not really sure, you don't know, say no. And if you're unsure because you haven't really looked at it yet, you're not ready, just say unsure. But you should be ready by Friday anyway.
Okay, we'll end that polling there. And now we've come to the end of our webinar. So thank you very much, Mariana, for answering all of those questions, and Aidan. Aidan, did you want to just mention to everyone in regards to the financial reporting update, which we'll be holding on the 21st of May?
Yes, thanks, Kim. So that's scheduled for the 21st of May. There'll be an appointment if it's not already come through. It'll be coming through very shortly in relation to that. So that's a financial reporting update for all clients, not just not-for-profit, but so accounting standards and everything applies for not-for-profit and not-for-profit. We're going to be discussing in there the impact of COVID-19 on financial statements. So many December year ends have had it as a subsequent event, but now year ends, March year ends, June year ends, it's not a subsequent event because lockdown happened before year end. So what's the impact there? How are we going to measure value assets, property, investments, etc.? How do we value those? So we're talking about that. We'll be talking about that and the impact on financial statements. That's one of the key things we'll be talking about. So that's something. Please put in your diaries, and we look forward to seeing as many of you there as possible.
Thank you, Aidan. Mariana, I've got one last question for you. We use an outsourced payroll provider who uses single touch payroll. Theoretically, They provide all the detailed employee nomination information directly to the ATO for us. However, the portal indicates that this step has not yet been performed, and we still need to identify our eligible employees via the business portal. Is this consistent with your understanding that this must happen both via the portal and the single touch payroll software?
So for electing eligible employees, my understanding is, and we've done it for others, is that you've just said here that, you know, use an outsourced provider. Now the question is, the outsourced provider has it updated for the JobKeeper. So your software provider has to have a JobKeeper updated in there. If it hasn't updated for the JobKeeper, then more than likely you'll have to go through your portal, pull the information out of there, I imagine, and there's clear instructions in the ATO website as how you do that. So you shouldn't, the only time you should have to go through the portal is to report your projections, but your single touch payroll that has been upgraded for JobKeeper should be sufficient. And it says that there's two ways to do it in the ATO website. One is to go through the portal and update your single touch payroll eligibility of employees that way, or if you've got JobKeeper on your payroll, if your payroll provider has it already, you just go through that. So the only time you might have to go through the portal is if your software provider isn't upgraded for JobKeeper, and also for doing your projections.
Thank you. I'd like to end our webinar there. I'd like to thank our panelists again. And in terms of the recording and the presentation itself, these have all been uploaded to the ENFP community on LinkedIn. So if you're looking for past webinars, everything is there for you. If you would like to chat with us, please don't hesitate. As you've heard, you know, these are difficult times and everything is not as straightforward. So everyone's email is down there. So if you would like to talk to us, please don't hesitate and send an email through. So thank you everyone for attending our webinar today. We'll again be holding our next one next Thursday, and I wish you all well. Thank you so much. Bye-bye everyone.